Welcome to Inside Bar Strategy video, and in this video we'll be talking about three major points of yours. One is some inside bars work, some don't, and if you go ask people, they will tell you that this is how markets work, it's probabilistic, but in this video I'll explain it is not and how you can save yourself. Second is what happens is you enter an inside bar, it goes down, it hits your stop loss and then moves out big. I'll solve that problem as well. And the third major problem is people say they buy inside bar, it goes up, they are in the profits, but by end of the day, the stock completely retraces back in and their profits are wiped out. These are the three major problems. But after watching this video, you will know one, the reality of inside bar trading, which is required. If you don't know that, you will never be able to make consistent money through inside trading, right? Judge when to go big and when to book profits fast. You will know when to have a big position size and also you will know when to book profits fast. And that will lead you to predicting that this stock can have a fake out here and this will move here. Because when you can differentiate that a stock is going to fake out, you can book profits and the trades before were red in your profit and loss or were flat or only giving you the headache of charges, now they will be profitable trades. This will lead to a higher win rate and a more consistent profits. We are going to learn all this through real time trading charts. We'll take plenty of examples on the charts and I'll explain all the concepts, all the strategy. And after that, there are three major misconceptions, because if you know the strategy but you don't know this part, then again it is not going to work. So make sure that you listen what I'm going to tell about misconceptions at the end part of the video. For now on, let's begin our study on the charts. Now let's understand the topics we talked about on the chart in detail. So the stock which I'm taking here is Traction, and this is where we identify the stock here in this area, and I had two trades in this. Now I'll explain that. Let's say you are an inside bar trader and this is where you see your stock. Okay, what happens is, let's say somebody buy around this level high of this bar, it triggered him and came back in 3% down. He will have a tighter stop loss and he will be stopped out of the stock once here. The next day, let's say he has, he is mentally great. He again enters the trade here on this day. This time the stock almost goes up 5% from his buying area, true, but by end of the day it is minus 0.74, and again he'll trailing stop loss will be hit. Two things has happened here. He first entered, he took a stop loss, one damage. Second time he entered, it was a squat. They will say it squatted, it came back in, or it faked out. But the thing is, here I traded the stock and I made great amount of money in this 4% move because I knew the probability of this happening is high. One thing. Then I took another trade and I did not book a lot of quantity. I kept most of the quantity for playing this complete move. Now you will say, well, how is that possible? Well, the first thing is I gave this stock live in my community. So we were tracking this stock. And the next thing is when you are trading here, I'll explain you the strategy. So when I saw the stock, let's only look at the price action on the left hand side. What do you see? Great buyers here. And I mark this level. I mark this entire zone. Now when I'm trading an inside bar here, you have to know that this is the region of sellers. There are no buying candles in this region. Can you show me a buying candle here? There is none. So I know that if a move comes from here on, it is going into a seller's zone, not a buyer's zone. So you should be looking to sell. You have to be with the sellers in the selling zone and you have to be with the buyers in the buying zone. See from where exactly the price started retracing. The high it made was 84.40 and our zone is this, and this happened. Now I'll explain the concept here. Pay attention. When you are buying here, you are going to be a seller here. So you are the buyer who's going to be a seller here, and he got his opportunity. This buyer is not going to be a seller here, because a buyer which is coming here and he wants to be a seller here had the opportunity here once. Again, he's showing up. That means his intentions this time are different. See how the stock cleared this resistance and kept on going up. So, somebody who doesn't have this understanding, somebody who's only an inside bar trader, is going to be perplexed. He's not going to understand what happened here and what happened here. But there is a great deal of learnings, great deal of uh, work you have to do. You cannot just say that one setup and then you are done. You cannot just say it's a probabilistic game. There is a deeper level of understanding that you have to have. So this was one instance of me explaining all this thing. Let's take another example, a live example. I'll take BL Kashyap is a stock. So you see there are buyers on the left hand side, and then you will see that there is an inside bar here. Now I'll tell you what happens with you. You buy this inside bar just like any other inside bar. What happens the next day? You are 1.5% up during some point of time, but end of the day you are minus 2.38. Stop loss. Then what happens here? Let's see. Another inside bar comes here. You buy here, right? And the very next day, what happens? Nothing happened. So no stop loss was hit, nothing happened. You probably added more, but the stock hit your stop loss. So what happened here? There is also a deeper level of understanding as I talked about. And if you only, if you're a pattern guy that you see buyers are there and then, you see contraction is happening, VCP or whatever, life is going to be difficult for you in the markets. You have to know that. But when you understand things, just like I showed you the previous concept, life gets a little easier. How? I'll explain. This was a trade a member of mine took. He took the trade, I think, somewhere here. The stock has been a great mover. Now, see what happens with people here is, let's say this is the stock, and you are someone who's buying this inside bar here. The stock went 4.42% up, but then it came below 1%. This damages a person a lot more, right? This damages you as a person a lot, especially when you have a big position size, and you see, you expected this can happen, but that did not happen. But see what happened after that. Consolidation here, and see the kind of move that happened. So again, as I said, the buyers here are going to be sellers here, and that exactly, I mean, the same level the price retraced from. After that, the buyers which are coming are not going to be sellers here. They are going to be sellers of a different area, different zone, right? And then see what happened. Once you reached a specific area, same thing happened here. And then again, same thing. So the thing is, it keeps happening. It keeps happening, and a great deal of trades this stock took. So you see, somebody who's a buyer here is going to be a seller of this zone. Price came. Somebody who's going to be a buyer of this zone is going to be seller here. So same thing, the pattern is being repeated in Arvind. So when you have understanding like this of inside bar and other strategies, you are going to do exceptionally well. So there is one more example, another live trade here. So I saw this stock, I marked this zone, okay, and well, there were inside bars here, so plenty of opportunity were coming here. I started my buying in this region, and the stock went up almost 6%, 6.57% entirety, right? 8% up. Now see, somebody who's just an inside bar and he doesn't know what the stock can do. He doesn't know if it will go 40% up or it will squat back down. He will hold all his position or he will sell all of his position. दो चीज़ें हैं which can happen here. I sold a lot of my positions here, and see what happened. In 2 days, the stock was going from plus 8% to only plus 2.5% for you. That is a big amount of damage you are doing to yourself and your trading account. True. And now the stock is now consolidating here. So now it looks great. So when you have that kind of understanding, when a stock will going much up or low, it's going to be great for you. I'll take one more example, a very classic example of something that I teach to people. who are serious learners who dedicate their time. So this was a stock I identified somewhere here in this region, entire uh, inside bar. Now see the tragedy of an inside bar pattern guy. He probably buys on this day, the higher triggers the orders, but by end of the day he's minus 2.37% and his stop loss is hit. True. The thing here is with this inside bar is tell me, is there a zone of sellers here which your inside bar buyers are going to be? No, there is no selling zone here. True. So that means the selling zone of these buyers is going to be something else. And I accurately predicted it. I'll tell you how. So I drew one line. I saw this chart, Bimel, and I drew this line here. Okay. Now let's talk about it. So I knew the black line 1668, 1668 जो price level है. I knew the buyers here are going to be the sellers of this zone. So if I'm buying here, this is my selling quantity area, not anything between it or not anything anywhere else. This is my zone. Whenever the price goes up from here on, I will have to monitor my positions very closely. See what happened after that. Now just see if somebody who bought here and held through here and he thought now we have broken out of a monthly resistance, now we are only going to go up from here on because at some point of time you were 15% up and he did not sell, he's probably at gains of only 5%. That is the kind of damage you are doing. So what happens is when you know the concepts, when you know everything about the inside bars, these moves are actually what will differentiate you as a great trader versus somebody who's just a pattern guy and he has a win rate of 20-30%. Otherwise, what's the difference? Otherwise, the markets will be, very linear. It's not like that. True. Everybody will make the same amount of money. But this is what differentiates a great trader to an average trader and further to a bad trader. Most of the people you see are bad traders. It hurts to say that, but that is what the truth is. And this is what I teach. So we got some great trades in the stock and we could analyze this. It was a good thing because I think I prefer trades which do this because the thing is these are the trades which actually differentiate you and the growth of account is dependent. If I take two-person, let's say you have learned from me and somebody who's just learned from a pattern guy, you are going to do much better consistently. You will see you are a happier person in general. You are not anxious a stock will go how much, right? There was another stock fact. I mean, it has just gone like anything, just gone like anything. So this stock was identified by a member of mine here and he said he will not buy here. Can you believe it? He rejected these inside bars. I'll I'll show you. I'll pin that post in this video right now. So now see this here. I hope you are able to see that we are on the chart of fact and he clearly said that the price has moved 60%, undercut of 1020. This is a concept which there is a more to this concept which I'm explaining to the people who are learning from me. And then he said it gives up move and then consolidation with less than average volume, then it give more probability of decent move, right? Let's see what happened. So he avoided this area, he avoided this entire area, and see what happened. We dipped below, we had an up move which is being talked about, give up move and then consolidation with less than average volume. Exactly the same thing, up move, average volumes consolidation, humongous returns, humongous, almost 46% in a matter of 14 days, right? So this is I wanted to show you, right? This is what a difference it makes. True. So if somebody is buying an inside bar here, this is how his stop loss is hit, and he will probably say, the markets are like that. It's probabilistic, but it's not like that. That those things can be changed, and high accuracies are very much possible. But again, those things only a few people can do, but only because only few people are ready to learn. That we have studied our setups, and I've gave you a good amount of learning here, all free of cost. Let's talk about three misconceptions that you need to know for any setup to it work. The first one, people are say the setups are completely market condition dependent. People will tell you that now they are 100% in cash because they see that Nifty or Bank Nifty has corrected 1% or 0.5%. And then if a stock doesn't do good, they will say, well, it is because of the market conditions. The market conditions are not great. Well, the thing is, I've traded great deal, and in fact, the best amount of setups that I've gotten is during when the markets are bad. And when you trade and make good amount of money in those durations, you are going to be a cut above the others. Well, you are not even going to talk about the percent returns, because your perception is going to be entirely different, whatever you have been taught through social media or whoever. The second now the theme I think is going on in the markets is small r high r is the only way to grow account. Please don't buy into this, because I've seen people who have taken expensive mentorships, expensive courses, and that has only led to a greater amount of frustration and clutterness in their head. They think that by taking a stop loss of 1 or 2%, making 10-20%, 1 is to 10, 1 is to 20 is the only way, and that is the only way to grow your account. But the thing is, to grow your account, it takes a lot of consistency, and consistency, accuracy, you need that, right? Because you see people talking about psychology and all that. Well, those things come when you have a very low win rate, because when you have a low win rate, who are you going to trust? True, because that element of trusting the setup or trusting yourself goes down as your win rate goes down, and that is a fact. So that is something you have to take care of. You have to have a very good win rate. If you are not confident in the markets while taking decisions, forget about taking big positions. You are never going to do that. You will always be anxious about it. Which leads to a third point, that is win rate. They will show you that 1 is to 5 if your average risk reward is a win rate of 30% is absolutely fine. A big winner will take care of all your losses. Well, the thing is, this is not a business of matching losses with winners. This is a business of making money. You make money when you are right. When your analysis is right. So there is a difference. But the thing is, if I say when you are right, you will now try to go for 100% accuracy. That is also something far-fetched. Why not try to be in the sweet spot of 80-90% accuracy? Why not? Why to go even for 100%? And why to settle down for as low as 30%, as I talked about? These things are so important that I don't think you are going to get these lessons anywhere else. So make sure that these misconceptions, you are not operating with those in the markets, and you learn the good things. If you are with this channel, you will learn the best here. And those who are interested in learning, who are serious, please, if you are not serious, please don't come to me. I'll not allow you to enter. Doesn't matter the amount of money you are ready to give. But if you are a serious learner, if you think you are a serious learner, if you think you are the person who deserves to get the knowledge, who can put in the work, then there is an email down below. You can put an email on that, and I'll reply back to you, and we'll have a discussion with you, and then you can learn in great detail about these concepts. So I think this video has helped you a lot in your misconceptions about the inside bar and other things. So I'll see you with another learning video. Another video is planned. I'll see you there.